The price of Bitcoin is right now $84,000. And I have amazing news regarding Jim Cramer. This is just about the most bullish thing you're ever gonna see.
Being the single worst moment in this decline was the moment between 3:30 and 4:30. Then Williams comes on, and then suddenly everything's fine. I don't think so.
Yes, that's right. Jim Cramer is bearish. He's telling you to sell, and you know what that means. The world's most accurate indicator has fired a buy signal. This video is for informational and educational purposes only. Nothing in this video should be taken as financial advice, investment advice, or any form of recommendation. I mean, just look at this data posted by Coin Bureau today regarding a whole year's worth of Bitcoin inflows and outflows to the ETF. November being the worst month ever for Bitcoin flows on the ETF. $3.55 billion of selling pressure in November so far, $3.56 billion being the all-time high, and we're only partway through November. Looking at this chart here, you can see generally green and then sometimes big red candles because people in crypto make rash decisions based off of a lack of information and generally driven by panic, over leverage, or an inability to trade. Or is it manipulation? Cameron Winklevoss, who owns Gemini Crypto Exchange, one of the biggest exchanges fully regulated in America. He posted this post to Twitter today. So I clicked on it and I watched it and I thought, oh my God. And just before we watch this clip, if you wouldn't mind, drop a like on the video. I'd really appreciate it. It makes me happy. You've got to bear in mind, I make literally nothing pretty much from YouTube videos. I make all of my money trading, investing, and doing the stuff. I do this because I love it, and I love it even more when you press that like button and you subscribe to the channel. So let's grow it. Come on, I appreciate it. And back to the video. But yeah, just for a bit of context and background on this clip. MicroStrategy potential bankruptcy attack. Word on the street at the moment is that JP Morgan is trying to cause MicroStrategy's collapse in order to acquire a lot of cheap Bitcoin from a bankruptcy auction of MicroStrategy. I want to know what you think about this. Watch this clip and let me know what you think in the comments.
Online, people are talking about some of the previous videos and the timing on JP Morgan, okay, and when they actually increased the margin requirement on MSTR. So let's look at that, right? So I have an email here from JP Morgan on July 7th, okay? That is when they did a firm-wide increase in the margin requirement for MSTR. Now, let's look at that, right?
Let me just give some context as to what he's talking about. When you increase a margin requirement, what that means is if you previously held $10,000 of a stock and you had down $1,000 in collateral, and then you increase the margin, you would have to then add more margin, which means adding more collateral to that trade in order to maintain that $10,000 position size. What this man is describing here is exactly the same as what happened with the unified trading accounts and the altcoins just a few weeks ago, whereby if you change a margin requirement, you force the sale of an asset in order to build back that margin requirement. When the asset has been sold and the margin has been fulfilled, the price becomes stable again. What he goes on to explain here is very interesting.
In the margin requirement for MSTR. Now, let's look at that, right? So we have a chart here, right? And I overlaid the vol on that chart. Let's look at July 7th, this line here, okay? Now, on July 7th, the 90-day vol was going down between June and July. The 60-day vol is going down between June and July, continues to trend down. Stock price is stable, goes up for a bit, but now look, as they put this firm-wide margin requirement increase on MSTR, it goes up, but then it pretty much precipitously goes down, right? People had to liquidate that security. Now, there is no risk model at that time that would have told JP Morgan they should be increasing the margin requirement. This is a coordinated attack.
So what do you think? Is JP Morgan attacking MicroStrategy to cause the inevitable collapse? Because it is a giant Ponzi scheme, but it's probably not going to collapse this time around. But it will do probably at some point in the future. And we've covered this a billion times on the channel. It's like the best Ponzi. It's like if somebody made BitConnect and then did a bunch of injections of steroids into BitConnect and created the world's best BitConnect because people didn't actually have to lose in the long term. In the even longer term, somebody's going to lose. But anyway, just found it fascinating that Cameron Winklevoss, one of Trump's top donators, is tweeting this about another one of Trump's top donators. Speaking of Trump's top donators, Crypto isn't one of them. It would be quite entertaining if he was. He was very pro-Trump pre-election. Then when Trump went into some countries and started going, became not so much a fan. I wanted to play this clip to you because it kind of spoke to me, and it speaks to probably most people watching this. is a smart guy. He's also a really nice guy, and I've known him for many years. But just watch this.
This Bitcoin and crypto dump is amazing, and if you disagree, you have not understood yet how to make money in crypto. All of my trades, these legendary trades which I've been showing for 8 years on YouTube, on Twitter, and everywhere, I opened them in the bear market. Altcoin profits, they are made with your purchase in the depth of the bear market, in the depth of the crash. These profitable trades, my most profitable trades of my whole life, like all of these trades, this one here, $16 million in total profits. I opened them in the depth of the bear market, November 2022, when the FTX crash came. Now when this quantum computing narrative gets bigger and bigger, well, probably that's when I'm gonna open my next legendary trade. Profits are made in the bear market.
And of course, this is a fact that we're all common with, and it's a very difficult fact because the time when you probably have the least money is also when probably the prices are at their lowest. But dips are opportunity. We are in a bull market. We have failed to break key levels of support so far. I'm going to show you a clip from RAOUL in this video, and he goes on to explain exactly why we remain in a bull market right now. Every single person that I know, including myself, that's been successful in this industry is only successful because we stayed. A lot of people, your friends, your family, your colleagues, your grandparents, they'll all lose interest in crypto if the prices dip. And the person that stays is the one that profits. The one that leaves is the one that comes back next time round, buys the top again, and complains that they can never make money in crypto. You just have to find good things at good prices and just find value where no one's seeing it. That, of course, doesn't mean scroll down CoinMarketCap and just buy any random coin. If you do that, you'll probably lose money. But if you stick to the top 10, top 20 coins, figure out which ones have got charts that look like this from a fundamental perspective. You're talking about number of transactions, number of network users, number of wallets, those things, they're going to be the metrics that decide which are going to be the most popular networks when it picks up again, because it will. It always does. However, back to the news, a little bit more lighthearted this time. Just watch this. I don't know how to describe this. It's not even really relevant to crypto. It's just funny.
Are you affirming that you think President Trump is a fascist?
I've spoken about...
That's okay. You can just say yes.
Okay. Okay.
Yeah. It's easier. It's easier than explaining it. I don't mind.
That there is the new mayor of New York answering a very difficult question. But now it's time for our daily stock market overview, courtesy of the man from Wall Street that you all know and nobody knows his name.
So many moving parts. This went from like a 500-piece puzzle to a 1,000-piece puzzle with components that were just like, I mean, so aggressive on both sides. I mean, we saw high, low lows, you know, a bubble, a recession. I mean, every possible thing that was so aggressive. It was wild. It was wacky, and it was a little bit baffling. But, you know, we're coming out of a space of this idea that just because Palantir sold off after crazy earnings, after it rallied 7 days in a row, that suddenly AI was a bubble, okay? And I'm going to pound that to the pavement because it was disrespectful in any means of us even implying that anyone would buy that story.
As you can tell from this, guys, it's been a wild week, but not necessarily a bad week, because although crypto is down, the Fed's reconsidering interest rate cuts in December. And if that happens, the market's going to go mental again. And the Bitcoin's price is going to be above $120,000 again. Just got to have faith, belief, and just tenacity. Stick around. Stick with it. I also found this clip today on Instagram, and this explains like how rich you are in comparison to other people. And I found it so interesting, especially if you're watching this video from the UK.
The average UK salary is £33,000 a year, rising to £39,000 for full-time workers. To get in the top 10% of UK earners, it's about £70,000 a year. But some workers are more likely to be high earners than others. In London, the top 10% earns £106,000 a year. In fact, if you're a Londoner in your 40s, to make it into the top 10% for your age and region, you'd need to be making £132,000 a year. But even then, you might not feel rich. We surveyed more than 4,000 people in the very first Times Wealth Survey, and it revealed that as a nation, we are disillusioned with our finances. Nearly half of us, 45%, feel financially vulnerable, and 37% of us say we are poorer than our parents were at the same age. Take those earning between £100,000 and £125,000 per year, those in the so-called income tax trap. Just 13% of these earners say they are very comfortable financially. Prosperity in modern Britain is a moving target, but where do you fit in?
I mean, I don't fit into it because I don't know how much money I earn, but it's more than 132k a year. Not many of you will know this, but I actually do run a very successful company. We do a lot of trading, education, and helping people actually grow their account balance rather than like, you know, like random signals and stuff like that. Because systems like that don't work. We create algorithms, we create bots, and that business is a very successful business. And you can become a part of it by joining it. It's called Crypto Saving Expert. We've been building it now for 4 years. Initially, it was like a complete challenger as to how do we actually make money from a business in crypto, because no one wants to learn, no one wants education. Problem is, we went and made an academy, and it's got like the world's biggest and best and most information, as well as a proven track record of actually generating people that have the knowledge, skills, and capabilities to then go on and make a fortune for themselves in this industry. The problem that we've got is when you've learned everything, you don't need the service anymore. So it's always been a very difficult job, is that if you're doing your job well, you shouldn't actually keep your customers very long. I would recommend you check it out. There's found a link for a discount code in the video description, and I'm running a $10,000 to $1 million trading challenge in there at the moment. That's where we literally take 10k, try and turn it into 200k, million k, whatever, doesn't matter. Point is, we're trying to make a profit. And as it stands right now, I'm in a trade right now that I posted in the group yesterday that is currently signing about $2,300 profit. But now time for a little bit of comedy. You see, we talk about Tom Lee on the channel every day. Every day Tom Lee goes on CNBC, tells us he's bought a bunch of Ethereum and he's going to make a bunch of money at some point in the future. But every day he's sweating, every day he looks ill, every day he looks terrified. It doesn't look like things are going that well. He lost $3 billion this week. And then these guys go on Twitter and post videos like this.
The only reason why the crypto market is lagging right now is because of a small software error. The only reason why Bitmine is down $53 billion on the Ethereum that we've bought is just a small computer bug. And I still think that Bitcoin's going to go to 250K by the end of the year, like I've been saying. But the only reason why I'm saying that is because I'm hired by Bitmine and they pay me millions of dollars to be the face of their company to shill Ethereum.
I mean, you know, kind of accurate, weirdly accurate. Anyway, back to the news. Satoshi Nakamoto. We will talk about the prices today. It's just like it's weekend, isn't it? So, like, you know, it's probably just going to do this, and then on Monday it does this again. But, you know, Satoshi Nakamoto's wallet has lost $47 billion since the all-time high on Bitcoin. Interesting fact. Doesn't really change anything for us because we're not Satoshi, so I don't have $90 billion and I never will. Unless something goes really well when I'm trading on BLOFIN, for which you'll find a link in the video description, but then I would, I guess, own BLOFIN. Anyway, back to the news today. Bottom is in. 80k Bitcoin, 2.6k ETH, $120 Sol. You'll never see these prices again, or I'll delete my account. I'm sure I've seen this tweet a billion times off this guy before, but hopefully this time he's correct. But now it's time to watch this speech from Raoul. Now this is different than the one that I showed you the other day. So using a similar chart, understand this video is about 6 months old, and so far, this the actual what has happened with Bitcoin price has followed this 100%. It hasn't actually missed a single beat. And he predicted this 6 months ago.
It's not a mystery. It is a repeat of the debt cycle. They are rolling the debts. They are doing the same thing. Each cycle is not to do with a halving cycle, nothing to do with any of that, all driven by liquidity cycle and funding of debts. Each phase, we get phase 1 of the banana zone, banana number 1. The corrective zone, banana number 2 comes. Another correction, banana number 3. So this is the banana zone. So that's what happened in 2020, 2021. Off we go. Sorry, that was 2017, which again looks very similar to this one. That was the last one. Here we are now. Can't be clearer to me. I've shown you the macro evidence, the technical evidence, the sentiment evidence. Everything here suggests to me that hold on to your hats, don't fuck this up. Don't lose control of your tokens. Don't use leverage. Don't get your wallet hacked. Just sit with it. Be careful. Don't get FOMO. Do all of the right things, and we'll go up to the next phase of correction zone. That's going to be harder because the next one that happens, we'll have a 35% drop, and you'll all say, "Is it over?" And you'll definitely be sure it's over. And everybody on Twitter will tell you it's over, and it won't be over. By our work, we suggest that because of the elongation of the business cycle, because rates were higher for longer, the forward-looking liquidity suggests that, again, probabilistically speaking, without any guarantees, this whole thing goes into Q1, maybe Q2 of 2026, which would align with Trump's, trying to win the midterms as well.
Now just think about that. Trump midterms next year. May, new person in charge of the Federal Reserve. May, stimulus gets printed. May, everything good happens. We only have to wait another 6 months. You're going to feel a lot like smashing your head against the wall for a while, but it's going to be worth it at the other side of it because the bull market's not over. It's probably the moment that we should be buying the dip, to be honest. I've been buying the dip all week, to be honest. We're getting so close to that good moment in time. We'll get there eventually. Just got to have the confidence to sit through these cycles. You just have to sit through them. It happens. You go up and then you go down 30%. And we're literally down 30%. I mean, literally just look at this chart. Oh my God, it's over. 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 Oh my God. It's like, come on. Oh, it's the bear market. My name's James Wynn. I pretend to be rich on the internet, but I got blitzed on my whole portfolio. Now I got no money. Anyway, elephant in the room, or should I say, I don't know, blue whale in the room. We're going down pretty quickly, pretty aggressively, and at some point, that's going to turn around Are we going to get down as low as $73,000? I honestly hope not. What are my expectations this weekend? Well, this is a daily chart, and this guy really looks like it's going down at $73,000. Don't want it to go down to $73,000. No one wants it to go down to $73,000, which probably means it's going down to $73,000. Either way, so we lost our parabolic uptrend. Fair enough. It is what it is. We're going to get a bounce at some point. And the thing is, it doesn't matter whether you buy here, 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 or here, or here. Because when the bounce comes, even if it goes all the way down, it'll be all the way back up again. And then we'll just get this. So my advice is just buy spot. Just get yourself on SWISSBORG. You'll find a link for it in the video description. Buy some spot Bitcoin. Buy some spot Solana. Buy some spot Ethereum. Of course, that isn't financial advice, but it's my advice to me. So, and when it comes to Ethereum, like, yeah, it's terrible. This is a 1 minute chart on Ethereum right now. I'm in a long position on ETH right now that is in a tiny profit, but it's still a profit nonetheless. This is the hourly chart for Ethereum. It looks terrible. What are we going to chart here? There's nothing to chart. We've just got a line going down. This is a really long line going down. We could look into this a lot more deeper and say, well, you know, we could look at the Fibonacci's or some crap like that, but we don't need to. We just don't need to. We're probably going to bounce. I really don't feel like elaborating any more than that, so just check out links and information in the video description. I'd really appreciate it if you drop a like on the video. If you would do, then that's amazing. If you won't do, then have a nice day, everybody. See you in a bit. Ciao.